In this video, we're going to continue on with slip-on in sandals. As you can see on the screen, we have the statement of cash flows, the indirect method, which we prepared in the last video. And now we're going to continue on and prepare the direct method, but just the operating section. If we did the investing section, the financing sections, they would look exactly like we see on the screen in front of us. So at least for educational standpoint, we're not going to replicate it here. All right, so let's look at what are we going to do with the direct method? Well, I think one thing we always like to do is look at the income statement for slip-on in sandals and let that really be our guide for what we're going to do. We can see we have sales. So for our direct method, we're going to show cash from customers. I really think that this is probably the best approach, just to look at the income statement and put every line item in there. So we need that number. We're also going to need cash paid for inventory, and which is again, if this is our sales number from our income statement, this is our cost of goods sold number from our income statement. And then the only other item we're going to have is cash for other expenses. Or we could call cash for SG&A expenses, whatever you want. But if I'm looking at here, this is the SG&A number. That's a terrible S, but forgive me. So we just need three numbers. Well, let's just start looking at what we need to do. Well, we're going to start, if we look for the customers piece, let's start with the number from the income statement, the $4,510. Let's go back to our statement of cash flows indirect method and realize we're going to have to pick up a couple numbers. What do we assume? If we look at that little box, and we're going to assume that all sales happen on account, the one number we need to pull in is the accounts receivable number. And looking at these depreciation expense, we know is going to be as part of cost of goods sold. The inventory is also part of the cost of goods sold. And these two numbers are going to be part of our other expenses. So this is the only item I need to pick up. Okay, so let me flip back to the other page. That's a negative 700. So if I put the negative 700 in here, I get a total of 3,810. So I can put that right here, 3,810. So that's my cash received from customers. So let's then look at the inventory account. And again, I know I calculated the inventory without depreciation, or the cost of goods sold without the depreciation, but I think we can just go take a shortcut it here a little bit and pull the number, the cost of goods sold number, right from the income statement, the cost of goods sold number, and then flip back to our indirect method. And what accounts we're going to pull up? Well, we know we're going to pick up the depreciation because depreciation is embedded in that cost of goods sold number. So that's a positive 250. And we're going to pick up that inventory number, right? So that's a negative 1,100. And those are the only two numbers we need to pick up from here. All right, so let's close that page, go back here. So a positive 250. And a negative 1,100. Oh, was that right? There's one more number, right? I think I missed something here. Let me look. The accounts payable. I am sorry. The accounts payable also goes in there because we assumed, if you look at the little box, remember that we assume that all inventory is purchased with the accounts payable account. So I also have to pick up this number. Glad I caught that. And a bit of cost lost of a couple points there. So I need to put the 2,500 on there also. I can see I made one other little mistake in here. When I look at my income statement, cost of goods sold should be an expense, so should have brackets around it. So when I bring over these other numbers, like the $250, the $1,100, and I bring them back with their signs over directly from the indirect statement of cash flows, I can pull these over, add them right up, and I think this gives me what, negative 1140, and everything. Then my addition should give me exactly the right sign on here. So negative 1140, 1140, and let me look at my other expenses. Again, we want to start directly with the income statement. So the number I'm going to pick up is 310. So that's for the SG&A. Go back to my indirect method. The only account that is left in the operating section that I haven't adjusted for are these accrued expenses. And it is $300. And it's a positive number. Okay, so I'll come back here to this page. Again, the expenses should have a negative 300 around it. And so when I pull the number from the indirect method, the positive 300 adjustment for the accrued expenses. I'm going to label that. I should have probably labeled all these, but I got a little sloppy. Apologize. So that's a negative 10. So cash expenses for the cash paid for other expenses is $10. And actually, so one of the things we can see is we had a lot of expenses, $310 worth of them, but a lot of them we haven't paid for yet. A lot of them are just accrued. We have payables due. So if I add up all these numbers, I believe I get 2,660. So this is my cash from operations using the direct method. And if the world is good for us, this will exactly equal the amount on the indirect method, and it does. Lo and behold, and the world is good. So we have now prepared the statement of cash flows using the direct method for the operating section.